Big tobacco is back. It looks like the market is now changing its opinion as to the value and the worth of big tobacco companies. British American Tobacco is up 57% since early 2024. Of course, this does not include the dividends, which last year was about 8% and this year has been around 7%. Ultra is doing a little less well, but still 47%, not including the dividend, which stands at around 7%. And of course, we can't forget Philip Morris, the best performing big tobacco stock over the past 2 years, up 88% in 2 years, not including the dividend, which currently stands at about 3%. Now, if you're a friend of this channel, you'll know that British American Tobacco has a special importance for us. And that's because it's the largest individual stock holding in the portfolio that we manage for the company. As of today, British American Tobacco is responsible for around 19.87% of the total value of the portfolio. The rest of the portfolio is blacked out of respect for the paying members of Rated A. Last time we mentioned British American Tobacco on this channel was at the start of 2024. At that time, we sold our entire stake of Altria, and the capital that we got from the sale we reallocated into British American Tobacco. The reason being, we just preferred the risk reward ratio between these two companies. Of course, since then, we've been really rewarded for that capital allocation decision. Given that the stock price is up so much over the past 2 years, maybe it's time to revisit our thesis on British American Tobacco, look at the bull case, look at the bear case, and just see what's going on with this company and what the market is thinking with regard to this company. In this video, I'm going to give you a direct insight into how I use the Rated A methodology to decide if the companies in the portfolio should stay in the portfolio or should be sold and the proceeds from that reinvested into a better opportunity. What are the mental models that we use to make that very difficult decision? So without further ado, let's dig right in. So the way I'm going to proceed here is I'm going to first outline the bull case for British American Tobacco, everything that's going right for the company. And then I'll be highlighting the bear case for British American Tobacco and what investors should be wary of before they make an investment or before they decide to keep British American Tobacco in their portfolio. The first thing that's very important to understand with this company is a bit of its acquisitive history. I like this report by Axios, and we're going to go through it because it highlights the important bits of information about the acquisition that British American Tobacco undertook in 2017. And this acquisition is important because it was transformative for the company. So, when British American Tobacco acquired Reynolds American in 2017, it was by far the most valuable brand acquisition of all time, involving brands such as Newport, Camel, American Spirit, and more, worth 93 billion US dollars. Now, that is a huge number. And at the time, this acquisition was extremely value destructive for the shareholders of British American Tobacco. But let's put the price paid for Newport to the side for a second and just focus on the portfolio of brands that BAT was able to acquire with this acquisition. We've got really well-known brands such as Pall Mall, Camel, Newport, and Lucky Strike, but probably even more important to the future of BAT were these two brands, Vuse and Velo. These two brands are extremely important for BAT because they are the spearheads of the transition from cigarettes to alternative products. Vuse is an e-cigarette, so it's just a vape. And Velo, of course, are the little nicotine pouches that people put inside their mouth. British American Tobacco took in an enormous amount of debt to complete this acquisition. This acquisition happened when British American Tobacco was trading at its tippy-top all-time high in terms of the stock price. Over the next 5 years, actually until today, the shareholders of British American Tobacco never recovered. The cherry on the cake happened at the end of 2023 when the CEO announced that he would write down the value of Reynolds American brands by $31 billion, a move described by the CEO as accounting catching up with reality. So, British American Tobacco takes a huge write down on the balance sheet, which was standing there as goodwill. Basically, this is the company admitting that they overpaid way too much for the acquisition and saying these brands that we own, this portfolio that we own, is actually worthless. And I believe what they said at the time was that they expected the brands acquired from Newport to be worth zero by 2050. This announcement marked the bottom for the stock price. One of the reasons the market has been turning around and becoming more accepting of British American tobacco and willing to pay a bit of a higher price for the stock is that management has been steadily paying down the debt. What started off as $44 billion in debt back in 2017 is currently standing at $32 billion. So the company is on its way to deleverage completely from this very expensive acquisition. That's reason number one why the stock is performing well over the past 2 years. Reason number two is quite simple. It's the rising importance of alternative tobacco products. Everyone knows cigarettes are going away, or at least that's the common consensus. Cigarette volumes have been going down since the 1990s. They're going down about 2 to 5% per year. And so the way that the market has been perceiving these big tobacco companies is that they're giant melting ice cubes. These products, these alternative nicotine products, put a shift in that narrative because now companies like British American Tobacco are seeing some growth in at least a part of their revenues once again. British American Tobacco is present in all three areas: e vapes, nicotine pouches with Velo, and heated tobacco with Glow. Reason number three why the market is turning optimistic for BAT is that the cigarette portion of revenues is not declining as quickly as some imagined. Here we can see that the revenues for British American Tobacco, which 90% of this is smokable cigarettes, was only down 5% for 2024. Down 5% seems quite bad actually, until you realize that if you account for forex changes, the adjusted rate is actually minus 0.5%. British American Tobacco reports in GBP, so when the GBP performs poorly relative to USD and other currencies, the reported results looked worse than they actually are. So, in few words, the cash cow of cigarettes still has a lot of cash. Yes, this is due to the fact that BAT has lots of pricing power and can hike prices on its packs of cigarettes quicker than the volumes actually decline. But it's also due to the fact that volumes aren't declining everywhere around the world at the same pace. We can see that in America ex US and in Asia Pacific, Middle East, Europe, and Asia, volumes for cigarettes were actually up 3.5%. Of course, the US drags down their results quite drastically, minus 4% in volumes. And unfortunately for BAT, the US is its largest market. Americans have some of the greatest purchasing power around the world, so this market is extremely important for BAT. But it goes to show that maybe not all cigarettes will disappear by 2050, as some people had assumed 2 years ago. The fourth and final reason why the market is turning on BAT is the way management is allocating capital. BAT used to have a very large stake in an Indian company called ITC, who has lots of business lines, but mostly they sell tobacco in India. It's a very profitable company. British American Tobacco actually receives a lot of dividends from this company, but after pressure from the shareholders, British American Tobacco has been slowly unwinding this position. On the 28th of May, Morningstar reports that BAT nets 1 billion Great British pounds from selling stake in ITC. BAT netted 1.05 billion from selling a 2.3% interest in ITC. So, BAT still has a massive position in this company. I believe they own 23%, but slowly they are selling block shares and allocating this capital to share buybacks. This is extremely interesting when the multiple to free cash flow is 8. So that sums it up for the main positive points regarding British American Tobacco. Now let's move on to the bear case for BAT. The first point here is the lack of growth. Look at BAT revenues since the acquisition of Reynolds in 2017. They've gone basically nowhere. You could even say that the company is actually making less today when adjusted for inflation than it was back in 2018. Now, there are a few caveats to this. The first is that despite revenues being flat over all those years, free cash flow is not. Thanks to its increases in pricing, BAT has been able to grow its margin over time, and cash flows are going up very, very slowly, but steadily. But let's not let that distract us from the fact that revenues are pretty much flat or decreasing over the last 6, 7 years. If you plan to make money in the stock market, it helps to have companies that are growing the entire pie over time. British American Tobacco is not doing this. They are merely becoming more efficient. Also, when you zoom in on the part of BAT that's supposed to be high growth and exciting, that's the alternative tobacco segment. It's only up 2.5% since last year. So you're telling me that the future that BAT is banking on is only growing at 2.5% per year. I don't know. I have some doubts. Once again, there is a small caveat. It's the fact that if you discount the territories that BAT left last year, which would be Russia and Belarus, and you account for Forex, the category was up 8.9%. That's already much better than 2.5%. But once again, let's not let that distract us from the fact that these growth rates are timid at best. And if we zoom in one more time and look at revenues by category, we can see that the only category that's outperforming is modern oral, the pouches, the Velo pouches. These were up 55% in 1 year. And actually, the other two categories were down. So it seems that BAT's entire growth revival is dependent on one single product, Velo. By the way, this category is also the smallest one out of all the other alternative categories. So the question to ask here is, for how long can BAT sustain this level of growth? My opinion is that it's not going to stay this high for very long. The second point in this bear case thesis I can summarize in 2 words: illegal vapes. British American Tobacco's Views brand used to be the most promising in the entire portfolio of BAT brands. However, since the 4 or 5 years after the pandemic, illegal vapes have become a huge problem in the Western world. These are usually much more colorful, they have great taste that appeal to kids and teenagers, and so the little corner shops end up preferring to display these over the boring vapes like Views. And as a result, BAT's market share has been steadily declining because of this issue. Governments are doing what they can, they're seizing stock here and there. So far, it hasn't been enough to prevent the tsunami of illegal vapes from reaching Europe and North America. The final point in this bear case thesis is that smoking is bad. There's still a very bad perception when it comes to cigarettes. When it comes to ESG ratings, these companies tend to have pretty poor ESG ratings. Most funds are not willing to touch any of these stocks because their clients don't want them to touch any of these stocks. The bad reputation from the 90s and early 2000s is still chasing them. That means it's also an easy target for governments because no one is going to be complaining if you try to put in a policy that goes against tobacco smoking. So, all this bad perception means that people are not willing to invest in it and governments are likely to regulate it. So, what does this all mean in practical terms? British American Tobacco today is still trading for a free cash flow multiple of 8.42. Granted, that multiple is not as good as when we first bought British American Tobacco in early 2024. Back then, the free cash flow multiple was 5 times. Both the bull case and the bear case are reflected in this quality rating, which indicates a C at the moment. When you try to value any company, you have to weigh the quality of the company, which includes things like the moat and the growth and the risk, and compare that to the valuation. Of course, higher quality companies, those that have a quality rating of A, for example, deserve higher multiples. But the bottom line is that British American Tobacco is still trading for a very low multiple, even after the stock has run up over the past 2 years. The expectations are very undemanding, and that's why the value rating is flagging British American Tobacco as a buy. If we take BAT through a dummy test and input something such as the buy price, the current revenue, a revenue growth rate of 1.5% over the next 5 years, very conservative amount of buybacks, a multiple of 10, the current dividend, a dividend growth rate of 1% and 100% of dividends reinvested, we get a yearly total shareholder return of above 16%, which handily beats the S&P 500, the average. So, all of this indicates that despite the stock price being at one of its highest levels since 2018, there's still some good value to be had with BAT. You just have to compare how BAT stacks up versus other opportunities in the market right now. Opportunities such as Evolution AB, the Swedish online gambling company. I made a full analysis of Evolution right here, so click on the link to see that video. That's it for this video, and I'll see you in the next one.